Hey guys, this is Mr. Oxy coming at you from Palm Beach in Florida. As you can see from my backdrop, I'm sitting in my office, which means I have to do some work again. But before I do that, I thought I'd better just address an issue here that has cropped up in the last couple of days, and that is something that Hans Intact asked me about. And he said, hey, Mr. Oxy, I followed you on Twitter and noticed that you were talking about uranium. So I thought, well, you know what? If I'm going to be accused of doing some cheating here in terms of my relationship with Oxy, I better address this. So let me first go back to the beginning. So this is what Hans was referring to. I sent out a note saying, okay, they won. I'm back on Twitter. Of course, if you follow me on Twitter, you do so at your own risk because you have no idea what I'm going to come up with when it's a one-liner. So you got to be cautious. But if you do want to follow me on Twitter, it's a new account. I just set it up yesterday. Today is April the 9th, so that would be April the 8th. I think so. Today's maybe April the 8th. I don't know. It's something like that. Anyway, if you want to follow me on Twitter, it's at RudyBest, at your own risk. And then Hans said, like, I looked at your Twitter profile and it's all about uranium. So I thought, you know what, let's take a quick look here and just do a quick comparison in terms of where we're at and what's going on. So the U.S. Energy Information Administration says the projects a nearly 50% increase in world energy usage by 2050, with the growth led by Asia. So regardless of the fact that your Oxy is crashing, and this morning I noticed it was trading at $24, it's just cheap, right? So energy is just cheap. We're going to have to be patient here and watch for the first quarter results to come in, because we obviously know what the price has been over the last quarter. And here's a quick snapshot of that, because oil prices, even today, after it's dropped a bit, it's still around $60 per barrel. And as we know, as Oxy fans, Oxy does generate approximately 1 million barrels a day. So this is big money. It is ka-ching. But, we'll have to see what happens. If you're in a hurry to make money on Oxy, you probably shouldn't be in Oxy. So, for the people who commented and asked me, what should I do? Should I sell what's going on? Why is it trading at $24, $25? Hey, Oxy could trade at $15. That just probably means I'll buy some more, because my cost basis is significantly lower than the current price. So I'm in a profit situation. So I'm kind of tempted not to buy, but if I had to, I would. Biden is about to give heavy oil demand a major boost. The reason why I added my Bester Risk-O-Meter over here high is because never believe anything a politician says, including your favorite president and mine, Joe Biden. It seems as if this $2 trillion package of the Federal Reserve printing money might target some of the money for building roads as an infrastructure project, and obviously that requires lots and lots and lots of crude oil. So let's talk about uranium, because there seems to be a feeling that I might be cheating on Oxy with uranium. In the first place, uranium risk is super high. What happened was, now almost 20 years ago, the Fukushima reactor in Japan got crushed as part of that tsunami that hit the Asian countries and caused enormous damage, and obviously a lot of fear and a lot of risk. And since then, uranium pretty much just tanked. But look at the uptick that uranium enjoyed the last time a big move happened. This price over here on the left-hand side is the price of uranium per pound. It spiked from where it was, sort of in the teens, to $140 per pound. And ever since then, it's kind of been on a gradual decline, just getting smaller and lower in terms of price, until over the past few months or so, it started spiking. Most of these long-term contracts are exhausted, and the demand for uranium exceeds supply by far as of today. I can give you a little graph on that, which I'm going to do in a minute, but just sort of keep this in your back pocket. The demand for uranium currently is about 190 million pounds, and the supply is about 140. So there we are. So here's one of my favorites. So firstly, high risk, right? You should not be investing in these at all if you have any risk or any trepidation in terms of where your stock might go. So if you're worried about Oxy, then for heaven's sake, stay away from uranium, because you will not have the stomach to watch these ups and downs as they happen. One of my favorites is an Australian miner called Paladin. In the United States, we have to buy this over the counter, so its ticker symbol is PALAF, PALAF. You can buy Paladin for about 33, 34 cents per share. They own the Langer Heinrich mine, which is in Namibia, and this little mine is about to restart. The cost of restarting operations is about $81 million. The life of the mine, in terms of cost of production, about $27 per pound. So for people who always say, "What's the break even? What's the break even? What's the there's your kind of break even." So right now, the spot price for uranium is about $30. So at 27 bucks, we're not making a lot of money. But as I showed you on the previous graph, it went right up to $140 per pound the previous time. It spiked. Peak production about 5.9 million pounds. The mine life is about 17 years or so. The restarting capital required is approximately $14 per pound. So the restart capital intensity, the operational cost, about $14 a pound. But Paladin is a nice little pickup as a uranium investment. They have cash in the bank and no corporate debt. How about this one? This is sort of one of my other favorites, Goviex. This is a Canadian company. I think it's headquartered in Montreal. Trades on the Toronto Venture Exchange. High risk, guys. High risk, high risk, high risk. If you're worried about Oxy, you're going to be very worried about Paladin, and you don't want to go anywhere near Goviex. This is going to make you crazy, right? So don't go there. Anyway, I'm not even suggesting you should buy it. I'm suggesting you should run away. Goviex is currently trading over the counter for me as a US citizen, and Goviex is trading at around 23, 25 cents per share. Goviex forecasts that most of the growth will be in China, South Korea, Japan, etc. But China and India for sure make up the largest growth areas in terms of demand. But here you can sort of see the supply-demand balance, right? This is not a good look for the people who need uranium, but it's a wonderful outlook for the people who say, you know what, the demand is far exceeding supply, and therefore I am interested in uranium, not at the expense of Oxy. I have not sold any Occidental Petroleum. This is third favorite. So favorite number 3 is Energy Fuels. This is their a slide from their business case where they say uranium is their core business, rare earth elements is their secondary business, and they also mine vanadium. Energy Fuels is an interesting company. They have decided to sell nothing. So they're just stockpiling their inventory, and they're going to sit on their inventory until the price recovers and until they can fetch a higher price for a long-term contract, for example, on uranium. They also add your financial strength and zero debt, much like my example of Paladin just a minute ago. Energy Fuels has cash in the bank. They have zero debt, but they have stockpiled an enormous amount of uranium and vanadium inventory. At the current spot price, their inventory alone is almost equal to the market cap of the company. America's proven uranium producers. Right at the top of the list here is Cameco. I asked one of my friends, hey, why are you not investing in Cameco? And he said Cameco, which is a Canadian company, is too safe. He's looking for life-altering returns on his investments, and therefore he is not interested in Cameco. I actually have a position in Cameco which is larger than the respective positions that I have in Goviex, Paladin, and Energy Fuels. But again, guys, high risk. Please stay away. I'm just doing this for your entertainment and for your education. So I thought I'll make a quick snapshot here just to compare the two, right? What's wrong with oil? Well, oil is dirty. Oil is filthy. Oil is fossil fuels. Everything that's wrong with the world as we know it is related to fossil fuels. This is just the ultimate evil, right? There's market sentiment, which is negative. So the market is basically saying, we hate oil. We love Tesla. It's like, okay, whatever. But in the meantime, you're charging your phone and you're cooking food and you're driving your combustion engine motor car, but whatever makes you happy. oil is very competitive. I mean, there's oil miners and oil drillers and oil asset owners and refiners and pipeline owners, etc., everywhere. I mean, this is highly, highly competitive. The fossil fuel market as it relates to energy specific oil and specifically oil and gas. So it's very overcrowded. It's got a very predictable supply. So as I said at the start of the video, we know that Occidental can generate approximately 1 million barrel equivalents per day, but it has unpredictable demand. Look what happened when COVID hit. Oil prices just crashed. They even went negative on the futures for a little while. How about uranium? So uranium, or more specifically nuclear energy, is probably the safest, cleanest energy that we know, and it's the most efficient source of energy that you could possibly imagine. What's the sentiment on uranium or nuclear? I don't know. There's a lot of people who are afraid that we're all going to get radioactive poisoning and we're all going to die. Those are probably the same people who say, eat organic food, otherwise you're going to die. It's less competitive for sure than the oil companies, because there's so many people in the sort of fossil fuel chain, but significantly less so, specifically targeting uranium and therefore nuclear energy, fewer miners and producers. And there's a predictable demand, because right now, as I said earlier in this video, the demand is off the charts and the supply is restricted or limited. So I mentioned Cameco. Cameco owns one of the largest uranium mines in the world. It's called Cigar Lake in Canada. And the Cigar Lake mine right now is closed, still due to COVID. So effectively, the production is zero. The other major producer is Kazakhstan, but Kazakhstan's uranium producer is state-owned, so it's not really an investable entity. I am invested in Cameco. Cameco's Cigar Lake mine in Saskatchewan is shut down, so they're not producing, which again impacts the supply-demand curve favorably from the point of view that demand is consistent, but the supply has not been consistent. And I touched on some of these with you as we talked about Goviex and Paladin and energy fuels. So this is Mr. Oxy saying, please do not buy uranium. Please do not follow my lead into nuclear energy. And for what it's worth, I'm still not cheating on Occidental Petroleum. I am a big fan. I hold my position. And in fact, if Oxy drops just $1 or $2 more, I'm probably adding to my position. So that's Mr. Oxy saying, stay safe, stay away from COVID. Goodbye for now. Thanks for watching.